Well, good news in for households this afternoon with the Reserve Bank announcing a further reduction in the OCR, this time down by 25 basis points, down to 3.5%. So that's more of a continuation of the same and certainly right in line with market expectations. And since they've kicked off the OCR reduction program, which commenced August last year, it's been a total of 200 basis points shaved off the OCR. So certainly more good news for homeowners and borrowers alike. Interest rate settings really are interesting at the moment, especially as the Reserve Bank heads somewhere towards that terminal OCR rate. So that position where they think all that easing is probably going to stop and things have got to a relatively neutral stage economy-wise. So one of the really simple questions our clients ask us is the 1 year rate, a better call than the 2 year rate? And even though that's a seemingly simple question in practice, the reality is that's where the rubber hits the road. If we were to look at, say, BNZ's economic research over recent times around where they see the OCR bottoming out versus, say, Westpac's, who've got a slightly different lens, those differences actually point to, at one bank, 1 year could be better, another they think 2 years could be better. So there's often a real challenge to make a really simple call and so much conflicting data. The reality is next week a whole new series of data could come out which could change that whole setting. Our job is to help our clients simply read the tea leaves, but more importantly, if we can understand where they're at in terms of their mortgage journey and property journey, along with their goals, expectations, and also their risk appetite, that all allows us to frame up a bit of a recommendation, which could even be $1 each way, meaning loans can be split across multiple fixed rates. So sometimes that's just the best solution for our clients. And we'd love our team to be part of that conversation piece with you. There's certainly a lot to consider around the world and local economies at the moment. Certainly geopolitical tensions are massively high. Trade tariffs are certainly the talk of the day, and how they are actually likely to impact upon local and international economies still is yet to be borne out. More locally, where does the unemployment level sort of finally rest at? Things like the review of bank capitalisation, how much capital they need to carry relative to their asset base. These things all have an impact on the bank's pricing strategies and ultimately their net margins, and ultimately how much borrowers can expect to have for their lending. A lot to consider, and all these factors have their own impact on New Zealand's place in the world, and also how we're striving to drive our economy forward. But there's a lot, and you can get baffled a bit by all of the numbers and all the science and all the technical nuance if you choose to go there. The other side of it is we can keep things relatively simple as well. Often there's only one or two options around what you want to do with your lending. Often there's so much more, but it's really about having really good engaged conversations with suitable professionals who've got an eye out for this sort of stuff and can make sure they can understand your settings to give you the best possible advice and help set you up for a better future. Here at Haven, I'm lucky enough to lead a team of highly capable, highly engaged mortgage advisors. So reach out, take advantage of all that skill, all that capability. You'll be super glad you did. Many thanks for listening. Have a cracker day.